picture. We have Satish Ramanathan, CIO-Equity FGM Financial Asset Management, who joins us now. Satish, it's always good to have you on the show, so thank you for joining us today. You know, in this kind of market that we have been seeing, once again today we're below that 19,700 kind of mark, 19,300 mark that we have been mentioning. And in this context, when so many global markets are weak, the entire setup is looking that way. Do you expect this pain to persist for some time? Do you think that we're going to see this market move lower from these levels as well?
So I think we need to slice it a little bit here, rather than just look at the market itself, which in our view could trend around these levels. It could go down a little bit, it can go up a little bit, but the global headwinds are increasing, and the global headwinds suggest that external facing businesses will probably be more challenged than domestic businesses. And I think that's where we need to be a little more selective. And we are seeing green shoots in rural India. And we're also seeing the banking and financial services doing exceedingly well. So I think the shift from external facing businesses to local facing businesses is what we are looking at.
Okay, so Satish, hi, good morning. That's true. I mean, that risk off is pretty evident on the screen. But is that also the approach that that you are taking to the portfolios? I mean, do you think this is just passing weakness, and perhaps you would still look at sectors like IT and metals?
So in the case of metals, I think with China being the largest metal producer, we do have issues coming in from time to time, and it's just too volatile to take a secular call on metals. As regarding the other sector, I forget, what was it that you were?
IT as well. Satish, I mean, IT is
Yeah.
not just, I mean, it's not only because of global headwinds anyway. I mean, there are issues in the US market with US banks, and we've seen that come up in the numbers and in the commentary.
Right. So in the case of IT, what we have seen is that in recent times, especially in the past 1 or 2 weeks, we are seeing some pickup in activity. Some deal wins are taking place. So IT is probably looking up in terms of the earnings momentum, but last quarter was uh, clearly not very encouraging. So we need to wait for the results. There were a lot of headwinds for the IT sector in terms of cost, in terms of attrition, in terms of deal wins. So I think they had a top line momentum issue, they had a bottom line momentum issue, and a cost pressure as well. So I think that's where we are as regards IT. But some of the smaller IT names have done fairly well because they've been able to manage the generic slowdown better than the larger names.
Okay, Satish, is there any pocket of the market which you feel like, you know, during this dip you are looking to buy, that you think, you know, right now might be a good time to get into? We've seen quite a lot of interest in the pharma space as well, especially after this Q1 earnings season. So is that space something that looks attractive, or are there any other pockets as well that you would venture into right now?
So I think India as a whole, if you look at it on a decadal basis, is going to be a counter-cyclical trade. And the reason why India is a counter-cyclical trade is that we need to invest in capex, we need to invest in growth, and there are so many factors helping India in terms of the banking sector, the manufacturing sector, and the retail sector as well, in terms of financial health looking pretty good. That's one. And second is that in terms of the ability to invest and grow, and the population that is available for MNCs in the domestic market, I think it's a long-term opportunity, right? We've been speaking about this. So what we are saying is that India will continue to be a counter-cyclical trade, and people will need to buy the dip and hold it for the longer term.
Okay, Satish, good having you on the show today. Thanks for joining in and offering the perspective. We appreciate your time. Have a good weekend, and we'll connect again soon. That's a view from JM Asset Management. We do need to take a quick break.